Hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. Am I audible and visible to everyone? Hi, Ruchi. Hello, Rahul. Hello, Irfan. Hello, Mohan. Hello, Krishna. Hello, Kavita. Hello, Kiran Bala. Hello, everyone. Good evening. How are you all? Am I audible and visible to everyone? Audio, video, everything is clear. Hi, Ruchi. Good evening. How are you? Hello, Kavita. Hello, Ankita. Where are everyone? Where is Hema? Hi, guys. Hello. Hello, Sharmila. Good evening. How are you all? Am I audible and visible to everyone? Yes or no, guys? Audible, visible to everyone. Hi, Shah Jahan. Good evening. Hello, guys. Hello. Right. So now, today we are going to have a final marathon part one for your examination, okay, of IEIFS. You know that we have only 2 days left, second and third. And on fourth, we are going to have the exam, right? So I want to have a detailed discussion of what are the important topics where you have to focus for IEIFS. What should be your focus? How will you be giving your examination? I have completed the full syllabus, the theory portion. Okay, we have all finished the theorem except the budget part. Budget part I am explaining here, and then I will be starting the questions. Okay, so the questions I will be starting, all the questions I will be giving you, and there will be a mixture of A plus B plus C and D. Okay, so everyone, whoever is the watching this video, just please at least like and share the video. Whoever is watching the video, just please at least like and share the video. Okay, so I think let's first discuss about what? Let first discuss about the normal thing, means I have to actually explain you the budget first, right? So we have go for a budget first, budget explanation. So I want to give you some explanation regarding budget in today's class, and then we are starting with the questions, everyone. Okay, first of all, you know that if we talk about the budget, okay, just a second. Okay, right. So let's talk about first of all the concept of budget. Okay, so budget is what? You know that budget is the coming. Okay, so in the upcoming financial year, what is the expected income and what is the expected expenditure of the budget in the coming financial year, right? So what is the expected income and what is the expected expenditure of the government for the coming financial year is called as the budget. And according to Article 112, the budget word is actually replaced by annual financial statement word, right? So now just I'm going to tell you some of the different concepts of the budget which is important to you all, okay, which on which I will be going to give you some questions also in the upcoming class, right? Now first of all, when we are talking about the income portion of the budget, we know that the government has different type of income, right? So government has taxes, non-taxes income, government has fees, fines, commissions, royalties and everything. So these are the different type of income that is earned by the government. So when we are talking about income, technically it is known as receipts. So receipts are actually divided into two parts. There are two type of income for the government. So first is called as the capital income and second is called as the revenue income. Capital receipt and revenue receipt. Now what is the difference between capital and revenue receipt? See, capital income, capital receipt means any those income of the government which either increases the financial liabilities of the government. Financial liabilities means what? See, when the government is just having some money and this money is going to have a burden for the government, means the government has to return it in the future, right? So any those income which is in the form of loans, right, that income is called as capital income, means which is increasing the financial liabilities. Or any those income of the government which reduces the asset of the government. Like for example, see, I am a normal person. For example, I have gold. I have sold the gold in the market and I have received 1 lakh rupees. Now, this 1 lakh rupees is actually reducing my assets. So, that 1 lakh rupees is called as the capital income. Okay, for example, I have borrowed loan from any bank. Now this is that income which actually increases my financial burden because I have to return this income to the bank. So that is called as the capital income. Now what is a revenue income? Revenue income is saying that any those income which neither increases the financial liabilities nor it decreasing the assets of the government. Okay, will neither increases the financial liability nor it decreases the asset of the government. Like for example, like just talk about some example. Like for example, government is borrowing some loans. Now borrowings of loan, either the government is borrowing loan from Reserve Bank of India, or the government is borrowing loan from any international monetary fund or World Bank or IMF, anything. Now these type of loan actually increases financial liabilities of the government, and that's why it is a capital income. Okay, for example, government is having taxes from the public. Now any type of taxes, whether direct taxes or indirect taxes, they are not increasing any financial liabilities nor they are decreasing any asset of the government, and that's why it is called as the revenue income. And that's why it is called as what? That's why it is called as the revenue income, right? Now for example, the government is for example selling some shares of their government companies. The government is selling some shares, okay, and then the government is receiving some income. Now this income is a capital income. Why it is a capital income? Because it reduces the asset of the government. Now for example, the government is having some fines from the public. Now that fines, it's not increasing financial liability, neither it decreasing any asset, so it is a revenue income. Okay, so these are the two type of income for the government: capital and revenue. Capital means either the financial liability is increasing or the asset is decreasing, whereas revenue means either the financial liability is not increasing, neither the asset is decreasing. That is called as revenue income, right? Now let's talk about the expenditure. Okay, now what are the expenditures? Okay, so again there are two type of expenditure of the government: either it is a capital expenditure or it is a revenue expenditure. Now what is a capital expenditure and what is a revenue expenditure? Capital expenditure means any those income, sorry, any those expenditure which reduces the financial liability, means the opposite of capital income comes in the capital expenditure. Capital income is increasing the financial liability, capital expenditure is decreasing the financial liability. Any those income which reduces the financial liabilities or increases the asset of the government, that is called as capital expenditure. Okay, and revenue expenditure means neither it is decreasing the financial liabilities nor it increasing any asset. For example, for example, the government is doing expenditure on building some park. Okay, now park is like an asset for the government, right? So that helps in the asset building, it increases the asset, so that is a capital expenditure, right? Now revenue expenditure, like for example, the government is doing some expenditure on subsidies. Now government is just distributing some subsidies for reducing the prices of the good. Now, that subsidy is neither reducing any burden of the government nor it increases any asset, and that's why it is a revenue expenditure. Okay, for example, the government is repaying a loan, repayment of the loan. Now, repayment of the loan is a capital expenditure. Why? Because it reduces the financial burden of the government, because it reduces what? Financial burden of the government. You can say that capital expenditure is development in nature, whereas revenue expenditure is non-development in nature. Like for example, technological expenditure is a capital expenditure because it promotes directly to the development of the economy. pension. Okay, it is a revenue expenditure. Okay, neither it reduces any financial liability nor it increases any asset. So these 4 points are very important: income, revenue and capital income; expenditure, revenue and capital expenditure, right? Now we have different type of deficits also in budget, but that deficits I am going to discuss in the MCQs. Okay, so we have lot of multiple choice questions depend upon the deficit concepts also, so we are going to discuss in that. Okay everyone. Hi Hema, good evening. So my audio is not clear, everyone. Just tell me, my audio is not clear yet or it is clear, everyone? Clear or not clear? Everyone, you guys, just please comment, am I audible clearly or not clearly? Everyone. Clear? Okay. Everyone, at least just please like the video. Whoever is watching this video, at least just please like the video to the maximum you can. Everyone. Okay, so now I'm starting some questions. Okay, okay. So today I'm just dedicating the full session on the MCQs. Okay, and tomorrow, in tomorrow's final marathon, I'm just going to give you a revision of important topics plus questions, right? So I am focusing more here on MCQs. I want you all to practice more and more and more multiple choice questions because theory is now finished. We have discussed a lot in theory, right? But now we want to have a question discussion. So now I am just going to start some questions for you all. Okay, so let's start discussing the very first question of the class. The very first question of the class. Okay, everyone, just read out the question. Everyone, just please read out the question. Give me 1 minute. Okay, so now, which of the following statement, everyone? The question is, okay, which of the following statement about the difference between bank rate and MSF is incorrect? Now, just understand the questions and then answer. Everyone, please understand first the question and then answer. Everyone. Which of the following is actually incorrect regarding the difference between bank rate and marginal standing facility? Okay, bank rate is used for long term lending, whereas MSF rate is for overnight borrowing. Bank rate loans require collateral, whereas MSF are granted without any security. MSF, marginal standing facility, is generally higher than the bank rate to discourage the frequent use. And fourth, the objective of bank rate is to manage long-term credit supply, while MSF helps bank meet emergency liquidity needs. Everyone, you can all answer this question. Very easy, very short, very simple. You can all answer this question. Everyone. So, which of the following statement is incorrect regarding bank rate and marginal standing facility? Incorrect. Everyone, please answer this question. Yes, we have to choose incorrect. Everyone who is watching this video, please like the video, guys. Everyone. Incorrect. Everyone, again, just please. Sunil, Divya, Sharmila, Indumati, Mohan, Sarth. Everyone, incorrect statement. First, bank rate is used to have a long-term lending. Correct. Whereas MSF is for overnight borrowing. True. It is correct statement. Bank rate requires collateral, whereas MSF loan are granted without any security. That is false. Bank rate loans, these are given without any collateral. No collateral is needed while giving the bank rate notes. loans, whereas marginal standing facility notes, these are actually granted with securities, right? So this is the incorrect statement. B is the incorrect statement. Now let's understand the difference between bank rate and MSF. So bank rate, you know that when RBI is giving long-term loan to the commercial bank is called as bank rate. Whereas when RBI is giving, okay, overnight loans to the commercial bank, okay, to manage their requirements, then it is called as MSF. So MSF is overnight, bank rate is long term. Okay, so it is long term, it is overnight. Now, third, collateral. See, bank rate loans can be raised without pledging any security. So no collateral is needed while giving the bank rate loans. Whereas in MSF, marginal standing facility, this is given with against some security, or you can say that some security is needed, okay, over and above the statutory liquidity ratio, and for this the marginal standing facility is given. Okay, so here the pledging is, or the loan is given with the collateral. Here the loan is given without collateral. Here it is written that bank rate requires collateral, which is wrong. Bank rate doesn't require collateral. Marginal standing facilities are granted with collateral. So B is the correct answer, everyone. Okay, done. Any doubt here? If you have any doubt, please feel free to ask your doubt, guys. Any doubt? See, I want to have everyone to be very attentive in today's class, to be very active in today's class. Okay, done? Okay. Next question. Now see, we have this next question. Read out the question carefully. Everyone, just kindly read out the question carefully. Okay, so statement one is saying in the organized sector, okay, job terms are well defined and employees are eligible for social security benefit. The unorganized sectors include all workers who are self-employed and receive social security benefit from the government. According to NEC and CEUS, the organized sector, unorganized sector include all incorporated employees with what? With fewer than 10 workers. Now just tell me the correct answer, everyone. Everyone, you guys. Please answer this question, guys. Everyone. We have to choose the correct statement here. Everyone. Okay. So Lakshmi is saying A, Kiran is saying A, Rigved is saying A, Rahul is saying A, Sunil is on. Everyone is saying A is the correct answer. Okay. So in organized sector, job terms are well defined and employees are eligible for the job securities. True. The unorganized sector include all workers who are self-employed and receive social security benefit from the government. Okay, so this is actually not correct. This is actually not correct. When we are talking about the unorganized sector, they do not receive any security benefits from the government. So yes, this is incorrect. Now, third, according to what? According to National Commission for Enterprises in the unorganized sector, the unorganized sector include all the incorporated employees or enterprises with fewer than 10 workers. That is again wrong. So unorganized sectors include, see, they define the unorganized sector as unincorporated private enterprises. So third statement is also wrong here. So when we have to choose the correct statement, yes, A is the correct answer. Everyone, okay, done. A is the correct answer. Easy. Easy question. This is very easy question for you all. Yes, it is a very easy question indeed. Next question. Now see again. Next question. Consider the following statement regarding the regulation of NBFCs, non-banking financial companies in India. So NBFCs, we have to calculate about NBFCs in India, right? So statement 1. In 1992, the RBI formed a committee headed by Mr. AC Shah to suggest measure for the effective regulation of NBFCs. Okay. Second, based on the Shah's committee's recommendation, significant amendments were made to RBI Act in January 1997, especially to the chapter 3rd B, 3rd C, and 5th. Statement 3rd is saying the amendments aim solely at increasing profit of NBFCs by allowing them more operational freedom. So, which of the following statement is correct? Here, everyone, please answer this question. Which of the following statement is correct? Here. Now we have to choose the correct statement. Everyone, we have to choose the correct statement here. Correct answer is what? Everyone, please answer this question. Everyone, please at least like and share the video, guys. Whoever is watching this session, at least just please like and share the video. So this is regarding what? This is regarding NBFCs, non-banking financial companies. Everyone. So A, Rigved is saying A. Smriti is saying A. Mohan is also saying A. Okay, every one of you saying A. Acha, Divya is saying D is the correct answer. So first statement in 1992, a committee headed by Mr. A.C. Shah. Now here you can just get one more question, okay, and that is which committee is related to NBFCs, non-banking financial companies. So which committee is Mr. A.C. Shah committee? That is perfectly correct statement. Remember, the committee, whatever the committee you are getting, just make a one-page note on committee and just write the committees. I have already shared you the list of the committees, but please just at least here, write down the committees. So, Mr. A.C. Shah committees suggest measures for the effective regulation of NBFCs. That is correct. Second, major changes has been done on the recommendations on the committee's recommendation, and these changes were made in 1997. The year is also correct. Changes has been done especially to chapter 3rd B, 3rd C, and 5th. That is also correct. So this is the correct statement. There is nothing wrong in the second statement. Now third statement saying that amendments aim solely at increasing profit of non-banking financial companies by allowing them more operational freedom. Now, it only focuses on increasing profit. That is wrong. So, this amendments, whatever the MEC Shah committee's recommendations, AC Shah committee's recommendations were there, they were focusing on increasing the consumer protections as well as they help in the supervisions of the regulatory reforms of NBFCs. The main focus was on the customer satisfaction, consumers protection, rather than just increasing the profits of NBFCs. So the focus was not enhancing NBFC's profit. The focus on the consumer protection was given. The focus on the regulation supervisory side has been given, right? So that is wrong. Statement third is also wrong. So when we are talking about the correct statement, first and second is the correct answer and third is the wrong statement. Everyone, any doubt here? Everyone, any doubt here? Any doubt? If you have any doubt, please ask. Which committee is responsible? Very important. Remember, AC Shah committee is responsible. Hi Chandan, good evening. How are you all? Clear? No doubt? Okay. Can we move to the next question, everyone? Can we move to the next question? Hema, Sharmila, Sunil, Chandan, Ruchi, Lavnish. Okay, everyone, just please comment where to get the list. Lavnish, I have already shared the list in the paid class in the PDFs or in the Telegram channels. Okay, I have already shared the list of these committees. Okay, so mean I will actually revise all the committees in today's session also. So don't worry. In the last of this session, I will going to give you the detail of important IEFS committees. So don't worry. Okay. So in the last, I will be revising and I will be giving to you. Okay. Don't worry. Okay, done. Next question. Now let's talk about match the following 5-year plan. So you have to now tell me the date also. Okay. Here you don't only have to match the following, you have to give me the dates also of the first, second, third, and fourth 5-year plan, right? So first 5-year plan, second, third, and the fifth 5-year plan. Now the key objectives have been given. Focus on the industrial, focus on the agriculture, focus on self-reliance, focus on growth with social justice, and the removal of the poverty. Now you have to just match the following here correctly, everyone. And please tell me the date also, the time frame of the 5-year plans also now, because that is also very important for you all. The time frames of the 5-year plan. Everyone, please answer this question. Irfan, Cherry, Divya, okay, Krishna, okay, okay. So first option. Now let's talk about the first 5-year plan. First 5-year plan time period 1951 to 56. Second 5-year plan 1956 to 61. Third 5-year plan 1961 to 1966. Then there was a planning holiday between 1966 to 69. Then fourth 5-year plan 1969 to 74, right? 69. Okay. And the fifth 5-year plan is from 1974 to 1979. And again, there was 1 year holiday between fifth and sixth 5-year plan, right? First 5-year plan was also known as Herod Bomer model. Second 5-year plan also known as PC Mahalobanis model. Fourth 5-year plan was also known as Gadgil Yojana, right? Now, the first 5-year plan focuses on the agriculture and irrigation. Okay, first is B. Okay, first is B. Second 5-year plan focuses on the industries, true. Third 5-year plan focuses on, yes, self-reliance, not self-reliance. Third 5-year plan, yes, poverty reduction, self-reliance. These were taken in the third 5-year plan. Fifth, focus on growth with social justice and the removal of poverty. Okay, so when we are talking about this list, yes, A is the correct answer. Definitely A is the correct answer. Right, everyone. Okay, now when we are talking about the three holidays or 3 time holidays in the 5-year plans. First holiday taken from 1966 to 69, remember. Second from 1979 to 80, and third from 1990 to 1992. You have to remember this also, right? Very important thing, during the second 5-year plan, 3 major steel plants have been set up because the industrial sector was the target. 3 major steel plant in Bhilai, Durgapur, and Rourkela. Right? Done? Everyone? Yes, sixth is Garibi Hatao. In sixth 5-year plan, the slogan has been introduced, Garibi Hatao. That is true. Okay, done? Clear? Can we move to the next question? Everyone, please at least like the video, guys. Everyone who is watching this session, please like the video, guys. Done? Okay, next question. Narrow banking in the context of non-banking financial companies refers to what? This is actually a PYQ. Narrow banking. What is a narrow banking? Everyone. What is the concept of narrow banking? What is the concept of narrow banking? Everyone. Hi, good evening, Manikanta. Everyone. No, Garibi Hatao Hema has been, the slogan has been introduced during sixth 5-year plan. Fifth 5-year plan, we have taken the objective of the poverty removal or reduction, but technically this Garibi Hatao slogan has been introduced during sixth 5-year plan. That Sunil is saying correct. Garibi Hatao is in sixth 5-year plan. Okay, everyone. Okay, everyone. What is the narrow banking concept in non-banking financial companies? So when we are talking about the narrow banking concept, see, narrow banking in NBFCs means when the bank are investing only in the safe assets, they are carrying out any activity which are risk free, which are safe. When it is recommended to any NBFCs and bank that you have to play safe, you don't have to take any risk, you have to invest in only the risk free asset, you have to just give only the risk free loans, right? That is called as the narrow banking. Narrow banking means narrowing the working and activities of the bank, right? So yes, B is the correct answer here. Investing funds primarily in the safe and liquid asset. Clear? Done? Right, everyone? Good. Next question. Now, see, this is a graph question, module D. You know that module D is very important. Now, let's talk about the graph. Shows a shift in the demand curve. Okay, this graph shows a shift in demand curve from D1 to D2. Okay, so here you will see that the demand curve is moving, shifting from D1 to D2. What could be the possible reason for this shift? Rise in the price of the product itself, a fall in the consumer income, assuming that the goods is a normal good, a rise in the price of substitute good, or imposition of higher taxes on the product. Very easy question. Please answer this question. Everyone. Everyone, please answer this question, guys. Smriti is saying C, and everyone else. Now, before this question answer, I want to take a 10 minutes of all of you to just give you a revision of the graphs. Okay, I want you all to just revise once against the graph, and then we will be discussing this question. Okay, so the graph, first of all, the movements in the graph and the shifting, very important concept, and I know that you are all confused in this topic, right? So you know that when we are talking about law of demand, I'm just taking the law of demand or demand curve, right? So what is the movements and what is the shifting? Okay, first of all, see this. Okay, this is a demand curve. Okay, so when the demand curve is not shifting from its place to left or right, okay, it is either going upward or going downward, then it is called as the movements. Then it is called as what? Movements. Okay, whereas shifting means what? When the demand curve is actually going either right or just going the left, that is called as shifting, right? So movement means the demand curve is just moving along the same demand curve, either up or down, that is movement. Shifting means when the demand curve is moving from its place, shifting from its place, either left or right, that is called as shifting. Okay, now in which case there is movement and in which case there is shifting. Very simple thing, remember. Okay, very simple thing. In movements, always remember price is affecting the quantity demand and the other factors like the substitute goods, okay, or you can say the complementary goods, the income, the climate, the taste, the preference, the fashions, these are all constant, means these are not affecting the demand. Whereas when we are talking about the shifting, in shifting, always remember price is the one factor which is constant. Now the price is not affecting the demand, but the demand is increasing or decreasing. It is due to what? It is due to other factor. So when other factors are variable, right, the demand curve will always shift. Okay, now just move to this thing. Here in this diagram, we clearly see that the demand curve is shifting to right from D1 to D2. Means there is shifting happens. So in shifting, we clearly know that the price is constant and the other factors is variable. So first thing is A cannot be the answer, because a rise in the price of the product itself, it only will move the demand curve in its place. Okay. Now here shifting happens. Shifting can be due to the other factors: income, taste, preference, taxation, and everything. Right? Now here the shifting is towards right. Right means the demand is increasing. Right means the demand is increasing. Now let's analyze these three options. First, a fall in the consumer income. If the consumer income fall, assuming the goods is normal good, the demand will also decrease. Normal goods are those goods where income and demand has the direct relationship. Income increases, demand increase; income decrease, demand decrease. Right? So here the demand is decreasing. So B cannot be the option. Now C, a rise in the price of substitute product. Now let's take an example of substitute good. I have already taken the example of Maggie and Yippee. Okay, so these are the two brands of noodles. Now, for example, if there is a price rise in the Maggie, obviously, if the price rise in the Maggie, demand will decrease in the Maggie. When the demand is decreasing in the Maggie due to the high price, people will shift towards Yippee substitute. So here the demand will increase. So here the demand will increase. And when the demand is increasing, the demand curve will move to right. Here the demand curve will move to right. Here it will move to left. Last, imposition of higher taxes on the product. Higher taxes, less will be the demand. Okay. So yes, C is the correct answer, because here it is a rightward shift. Clear, everyone? Now if you have any doubt here, please ask everyone. Any doubt? If you have any doubt, you are free to ask your doubt, guys. Or just please give me a thumbs up. Yes, yes, correct answer is C. Any doubt in this? If you have any doubt, please ask why it is shifting, why A cannot be the answer, why B cannot be the answer, why C, oh, sorry, why D cannot be the answer. Clear? Everyone, guys? Good? Okay, good. Next. Which of the following statement regarding the velocity of money is incorrect? Now we have to choose here the velocity of money. A statement regarding velocity of money is incorrect. Everyone, just please read out the question and answer. Velocity of money. We have to choose the incorrect statement, everyone. Velocity of money represents the frequency with which a unit of currency circulate in the economy to purchase the goods and services. The velocity of money is calculated by dividing nominal GDP by broad money. Velocity of money and multiplier are the same concept and measure identical economic factors. Velocity of money established a link between broad money and nominal GDP. Everyone, please answer this question. Easy, easy. This is very easy. We have to choose the incorrect statement here, right? We have to choose the incorrect statement here, everyone. So please answer this question. We have to choose the incorrect statement here. Okay, so velocity of money represent the frequency. Velocity means speed. I have told you velocity means speed. Okay, so how quickly the money is changing hand. How quickly the money is changing hand. That is the velocity of money. So first is the correct statement. Velocity of money is calculated by dividing nominal GDP by broad money. True. Third, velocity of money and money multiplier are the same concept. That is incorrect statement. They are not the same concept. There are two different concepts. Velocity of money establish a link between broad money and nominal GDP. That is correct. We have to choose the incorrect statement. C is the correct answer here. Everyone, very simple. C is incorrect. C is incorrect. Velocity of money and money multiplier, they are the same concept. No, they are not the same concept. Velocity of money and money multiplier, they are not the same concept. Okay, let me give you a quick revision on that, everyone. Okay, do you want to have a revision on velocity of money? Yes or no? Do you want to have a revision? Just a second. Okay, now when we are talking about the velocity of money, I'm just giving you a simple idea. What is a velocity of money? Give me 1 minute. I'm just having this book. Okay. Now you are seeing my back. Okay, now we are seeing that what is a velocity of money. Okay, if I'm talking about the velocity of money, velocity of money is actually the ratio between nominal GDP and money supply, right? So it is actually a link between broad money and nominal GDP. So when we are talking about how quickly the money is changing hand, means when the money is quickly transferred from one people to another people, right? That is called as the velocity of money. If there is high velocity of money, it suggests that yes, the money is spent on a high rate, means the people are focusing more on spending the goods and services, right? But for example, if there is a low velocity of money, it is actually what it is representing, that people are rather saving. Okay, people are saving more and spending less, right? So velocity simply divided nominal GDP divided by broad money, that is velocity of money. Now let's talk about the money multiplier. Money multiplier is how the base money, how the reserve money is converted into broad money. So if we talk about the money multiplier concept, money multiplier is M3 divided by M0, means how the reserve money is converted into broad money. That is money multiplier. Whereas velocity of money is what? Nominal GDP divided by the broad money. They are two different concepts. They are not the same thing. Okay. And remember, when we are talking about money multiplier, this was given by Milton Friedman and Anna Schwartz. So these were the two economists who has actually given the concept of money multiplier. Clear, everyone? Yes or no? Any more doubt here? If you have any more doubt, kindly ask. So now it is clear. Now you are not confused that what is money multiplier and what is the velocity of money. Expect a numerical question from here. Expect a numerical question from here. Why I have opened the book? Because I want you all to just give the idea, correct idea. I have not make any of the PPT here, right? Whatever you want, if you want to have an explanation of anything, you just kindly tell me. I will open it in the book and then explain you, right? So that you can just see the content also, everyone. Okay, done, everyone? Clear? Okay, now next concept. Which of the following securities are not eligible in the RBI retail direct scheme? Everyone, please like the video, guys. Okay, which of the following securities are not eligible in RBI direct retail scheme? Reserve Bank of India direct retail scheme, everyone. Not the concept. Which of the following are the not the securities in what RBI direct retail scheme? Everyone, please answer this question. Yes, when we are talking about direct retail scheme, first of all, retail direct scheme, not direct retail scheme, retail, sorry, yes, just a second. Okay, yes, when we are talking about the RBI direct retail scheme, treasury bills, government, central government bond securities, and sovereign gold bonds. So these are actually the part of, yes, RBI retail direct scheme. Corporate bonds are not the part of RBI direct retail scheme. Okay, so let me give you a detailed explanation here also about the RBI direct retail scheme. A quick revision, everyone. So when we are talking about the RBI direct retail scheme, first of all, to increase the investor space in the government securities, you know that we normal investors can invest in the government securities. So for that, RBI just launched its RBI direct retail scheme on November 12th of November 2021, right? Now there are various securities, and you know that these are the securities which are given. See these securities. There is Government of India Treasury bills, Government of India dated securities, sovereign gold bond, and state development loans. So these are the four eligible government securities which are allowed for investment under RBI direct retail scheme. This scheme has been started by Reserve Bank of India in November 2021 to order to deepen the what? To deepen the individual participation in the government securities area. Clear, everyone? Okay. Any doubt? No doubt? Okay. Now, next question. See, in the government securities nomenclature, 7.25% GOI 2033. What does 7.25 represent? This is actually a PYQ. Same question was asked in the previous exam cycle. Okay, same question was asked in the previous exam cycle, everyone. In the government security nomenclature, 7.25% GOI to 2033. What does 7.25% represent? Everyone, please answer this question. We can answer this question, everyone. Easy, simple. First, 7.25%. It is the coupon rate. What is a coupon rate? Coupon rate is the fixed interest rate. Coupon rate is what? Coupon rate is the fixed interest rate that is given on holding that security till maturity, right? So what is coupon? Coupon is a fixed interest rate. Now GOI means Government of India. 2033, this is actually the maturity year of the bond. Do not confuse it with the purchasing year. This is actually the maturity year of the bond. It means that the bond will mature in year 2033 and the principal amount will be repaid to the investor on this date. Okay, so this is 7.25%, which is called as the coupon rate. Everyone. Okay, done? Clear? Clear, everyone? Next question now. Under Section 135 of the Companies Act 2013, which of the following statement is true about corporate social responsibility? Free by Q. Previous year question, everyone. Please answer this question. Okay. Indumati B. Okay. Ruchi B. Trish B. Smriti B. Okay. Correct answer is what? Very simple question. Very simple question. Corporate social responsibility. First of all, two important thing I have to told you. Section 135 is related with corporate social responsibility. Just learn this. Expect a question from CSR. Very important, right? Second important thing is, what is the modern dimension of the corporate social responsibility? This is the same question which is asked in the previous exam. What is the modern dimension of corporate social responsibility? So the modern dimension is ESG. Okay, environmental, social, and governance. So ESG is the modern dimension. Section 135 deals with CSR. And remember, CSR and ESG is not the same thing. Okay, CSR is a bigger term. Okay, so ESR and ESG is not the same term. Okay, now first of all, the companies can transfer unspent CSR fund to their profit and loss account after one financial year. No, excess CSR spending can be carried forward and adjusted against the future CSR obligation. True. Companies must allocate exactly 2% of their net profit annually with no flexibility in the spending limit. False. So, corporate social responsibility is what? Every company has to mandatory, this is mandatory requirement, spend at least 2% of the net profit in the corporate social responsibility. Now, at least 2% means, for example, in any year, a company is spending more than 2% also, then that excess would be adjusted in the future years. Right? For example, in this year, my company decided to spend 5% of our net profit in the CSR. Now, excess 3% will be carried forward. Means next year I don't have to spend 2% because that is adjustable. And in the third year, I have to spend only 1%. Why? Because 3% extra I have spent this year. So, what 3% extra I have spent this year is carried forward and adjusted against the future obligation. So, B is the correct answer. Now, you can get a numerical question also from this corporate social responsibility. Clear, everyone? Any doubt? Any doubt? Next question. Under Reserve Bank of India's special 3-year, okay, SLTRO scheme, I'm not taking the full form, small finance bank SFBs were permitted to lend how much per borrower? Very simple question. You can all answer this question. Okay, everyone, and just tell me the full form also. C is also correct. Why C is correct? Must allocate exactly 2% of the net profit annually with no flexibility in the spending limit. No, false. No, no, no. Spending obligation now, according to the changes which has been done, the excess will be carried forward in the future. And that's why if it is saying that you must allocate exactly 2%, that is wrong. Okay, there are flexibility in the spending limit, and that's why C is wrong. Okay, now see, everyone please answer this question. Under Reserve Bank of India special 3-year special long term repo operation, what is SLTRO? SLTRO scheme. It is a special long term repo operation. Small finance banks are permitted to lend how much per borrower? Now you are all saying a only one. Ruchi is saying correct, that is D, that is 10 lakh. Only Ruchi is correct here. Now let's talk about this term. A special long-term repos operation. Now, this is for the view to support the small business unit, micro and small industries, and other organized sectors. Okay. RBI considered or conducted special 3-year long-term repos operation at repo rate for the small finance bank to be deployed for fresh lending up to rupees 10 lakh per borrower. So in this, Reserve Bank of India is actually having the operations, okay, to support the small business, micro and small industries, and the lending is given at repo rate for the small finance bank, and that is that the RBI is giving to the small finance bank, and small bank finance bank has to deploy these funds into small business unit, micro and small industries, and other unorganized sector. Okay, now here the fresh lending can be up to rupees 10 lakh per borrower, right? So it is simple, rupees 10 lakh per borrower. It is allowed. Okay, so that is the correct answer. Everyone. Okay, any doubt here? Any doubt, guys? So if you have any doubt, please ask everyone. Any doubt? Yeah, good. Next question. Now see next question. I'm just switching off the camera. Read out the question. I have switched off the camera. Reach out the question, everyone. Okay. So question is, XYZ Financial Services is a non-banking financial company, okay, involved in the acquisition of shares and securities, okay. It has the following characteristic. 92% of the total asset investment in equity shares, preference shares, debt, loans in group companies. 65% of the total asset in the equity, which are compulsory convertible into equity within 10 years from the issue date. Company does not trade in its investment except through block sales for disinvestment purposes. The company's asset size is 120 crore and it accept public fund. Now, based on the information, which of the following best describe XYZ Financial Services? So, XYZ Financial Services is classified as CIC NDSI. B is here. Okay, please see B is here. XYZ Financial Services is an investment finance company. XYZ is characterized as a venture capital company, or it is considered as a public investment company. So you can all answer this question. Everyone, the characteristic is given, everything is given. You have to answer this question. Okay, so you are all saying A is the correct answer. So it is an easy question, although the question is very lengthy, but the answer is very simple. See, we have to see, first of all, their main function is the acquisition of shares and securities, right? 92% of the investments, these are in equity share, preference share, debt, and loans. Okay. Then 65% is equity shares. Okay. Asset size is 120 crore. Now, it defined it as a core investment company. That is the simple thing. Yes, A is the correct answer. Core investment company. No, not B. No, no, not public investment company. It is C. Sorry, it is A. Core investment company. Now let's talk about the core investment company's characteristics. I have written here because it is important. Okay. So core investment company, non-deposit, systematically important. This is a type of non-banking financial companies which carry out the business of acquisition of shares and securities. So the main function is the acquisition of shares and securities. And the characteristics are, it should not hold less than 90% of their asset in the equity shares, preference shares, debt, loan, and in the group company. Not less than 90%. So here, first condition is fulfilled. 92% means more than 90%. Okay. Its investment in the equity share convertible into the equity share within the period of not exceeding 10 years in the group companies should not be less than 60%. Again, the second condition is satisfied. It is 65%. That is converted within 10 years from the issuing date. Right? Correct thing. Third, it does not trade in the investment in shares, debt, or loan in the group companies except through block sales, right? Fourth, its asset size is 100 crore and above. So here the asset size is given 120 crores, okay? And the last thing is the public fund. They accept public funds? Yes, they are allowed to accept the public fund. So all the conditions are satisfied for the core investment company. So yes, XYZ Financial Services is a core investment NDSI company, right? Very important. The characteristics are very important. Learn the percentage here, right? These percentage are very important. Very important is what is the asset side of the core investment company, that is 100 crore, and they accept the public deposit or public funds, right? Everyone clear? Done, guys? Can we move forward? Next question, can we move forward? Everyone, please at least like the video, whoever is watching this session. Kindly, please just like the video, guys. Okay. Which committee recommended the setting up of National Housing Bank? Again, a committee related question. I always give you a committee related question because I know that committees are important. So we have discussed one committee before, AC Shah committee in non-banking financial company. Now the second company committee, National Housing Bank, and this I have given you a lot of time. Now you have remember National Housing Bank, and tell me the establishment also, the date of the establishment of National Housing Bank. National Housing Bank, date of the establishment of National Housing Bank. National Housing Bank, Dr. C. Rangarajan Committee, established in 1988. Act has been passed in 1987. Okay, Act has been passed in 1987. Committee has been established in 1988. Clear? Done? Good. Next question. Consider the following statement regarding the sunrise sector in India. Very important concept. Sunrise sector. Very important concept, everyone. Sunrise sector. First, sunrise sectors are the industries that are characterized by strong growth rate, innovation, and public awareness, attracting investors due to their long term growth potential. Textile, manufacturing, and coal mining are considered prominent example of sunrise sector in India. We have to choose the correct statement here. We have to choose the correct statement here. Everyone. Very simple question, correct statement here. Okay, Trish is saying A is the correct answer. Hema is saying A. Divya is also saying A. Himanshu is saying A. Okay. Shamila, Chandan, they are also saying A is the correct answer. If we talk about the sunrise sectors are industries that are characterized by strong growth rate, innovation, high public awareness, attracting investors due to their long-term potential growth. True. Textile manufacturing and coal mining are the prominent example of the sunrise sector. False. Green energy, fintech, IT, electronics, pharmaceuticals, automobile, healthcare, retail, renewable energy, processing plants. These are called as the emerging sectors. And these are called as the sunrise sector. Textile, coal mining, no, no, no. They are not the example of the sunrise sector. So this is wrong. This is correct. So only second is the correct statement here. Sorry, only first is the correct statement. A is the correct answer. Okay, right. Next question. Now let's talk about the next question. Consider the following statement regarding the Sustainable Development Goals. SDG, Sustainable Development Goals. The Sustainable Development Goals were adopted by UNGA, United Nations General Assembly, in 2015 and have a time frame from 16 to 30. The SDG replaced the Millennium Development Goals, which had a time frame of 2000 to 2025. The total number of SDG is 21, covering environment, economic, and social development objective. We have to choose the correct statement here. Easy question, we can choose the correct statement here. Very simple, very easy question. Simple, easy. Okay. Hema is saying D, Chandan D, Ruchi is saying T, Chandan D, Jamini D, Divya is also D, only one. It's the correct statement. Okay. What is wrong in the second statement? What is wrong in the third statement? Tell me. What is wrong in the second statement? What is wrong in the third statement? Tell me, everyone. What is wrong in the second statement? What is wrong in the third statement? Everyone, you have to tell me. See, first statement, sustainable development goal adopted by UNGA, correct? In September 2015, correct? Time frame 16 to 30, correct? Right, right. In now, second, sustainable development goal replace the millennial development goal. That is true. Millennial development goals was there before the sustainable development goal, but the time frame is wrong. It is actually from 2000 to 2015. From 2015, then 2015 SDG started, and then from 2016 to 30, we have SDG. Now, the total number of sustainable development goal is 21. First, it is only 17. We have total 17 sustainable development goal, not 20. Yes, so only one is the correct statement. Second and third, they are the false statement. Now, everyone says 17 sustainable development goal. Okay, let's have a look. No poverty, zero hunger, good health and well-being, quality education. Now, this is very important today. Okay, I have a very strong feeling that you can get a question from SDG 4, quality education, gender equality, clean water and sanitation, affordable and green energy, decent work and economic growth 8, industry innovation infrastructure 9, reduce inequality 10, sustainable cities and communities 11, responsible consumption and production 12, climate action again important. Okay, life below water, life on land, peace and justice, and strong institution. And 17 is partnership for the goal. So these are the 17 sustainable development goal adopted by United Nations General Assembly, time frame 2016 to 30. Clear? Okay, everyone. Good. Next question. See. Consider the following statement about non-banking financial companies that are exempted from registration with Reserve Bank of India due to the regulations by other authorities. Okay. Statement 1. Chit funds regulated under the Chit Fund Act 1982 by the respective state government are exempted from the RBI registration. Housing finance company regulated by IRDAI are exempted from RBI's registration. Merchant banking companies and stock broking companies registered with SEBI are exempted from RBI's registration. We have to choose the incorrect statement here. We have to choose the incorrect statement here. Everyone, please answer this question. Incorrect statement here. Hello, am I audible? Everyone? Okay. So, exempted from the registration, we have to choose the incorrect statement, which are exempted from the registration. Everyone, you know that we have a lot of uh, NBFCs which are exempted from registration with Reserve Bank of India, right? First, chit companies regulated under the Chit Fund Act 1982 by the respective state government. That is correct. Chit funds companies are regulated by the state governments. Okay. Second, housing finance companies regulated by IRDAI. False. Housing finance companies by National Housing Bank. You know that it is by National Housing Bank. National Housing Bank has been recommended by C. Rangarajan Committee, right? Now, third, merchant banking companies and stock broking companies are with SEBI. That is also correct. So we have to choose the incorrect statement. Only second is the incorrect statement. Housing finance company by National Housing Bank, recommended by C. Rangarajan Committee. Remember this, okay? Now, very important is this slide. Very important. Please just learn this slide. Very important, okay? Which NBFCs are exemption or exempted from registration with Reserve Bank of India? Venture capital, merchant banking, stock broking because they are registered with SEBI, insurance company with IRDAI, Insurance Regulatory Development Authority of India, Nidhi companies by Ministry of Corporate Affairs, chit companies by the respective state government, housing finance companies regulated by National Housing Bank, stock exchange mutual benefit companies regulated by SEBI. Now, because from eliminating them from the dual regulation, they are exempted from the registration with Reserve Bank of India. So learn these points. These points are very important for all of you. Okay, done. Okay, everyone. Yes, next question. See. An infrastructure finance company, IFC, is a non-banking finance company which deploy at least dash of its total asset in infrastructure loan, have a minimum net owned fund of dash, and have a minimum credit rating of A equivalent. We have to answer this question, everyone. We have to answer this question. Everyone, please answer this question. Ma'am, where to download this PDF? You can get this PDF after this class end. Okay, I will upload it in the Oliveboard app. So you have to download the Oliveboard app, okay, and then go on the YouTube PDF section. From there, you can just download it free of cost. Okay, everyone. Okay. Please answer this correctly. Everyone, this is a very simple one word factual without any case study, without any complicated thing. This is one word simple factual question. You can all answer this question easily. You can all answer this question easily. Okay. Now, when we are talking about this, an infrastructure finance company is a non-banking finance company which deploy at least 75% of its total asset in the infrastructure loan, have a minimum net owned fund of what? Have a minimum net owned fund of 300 crore and have a minimum credit rating of A equivalent. Three things are important: 75%, 300 crores, and the minimum credit rating of A equivalent. So the correct answer is C, everyone. Okay. Audio, okay, actually, I have just conserved my energy, Hema. I am just speaking low. Okay, done. Ma'am, I have read all your paid class PDF. It is enough for the exam, ma'am. Definitely. Definitely, guys. If you have read the PDF of the paid class, that is enough for your examination, right? Now, whatever is left out there, for example, if anything is left out there which is not for the explanation, that I will be covering in the questions. Okay. So, questions plus the PDF class. If you are seeing all these things, it is enough for your exam. Nothing to worry. Everything will be fine. Okay. Okay. Next question. Now just see this question. This is a case study based question. I'm just switching off the camera. Now just see this question. Okay. Reena took a health insurance policy, disclosed all the necessary detail about her medical history, lifestyle, pre-existing condition to the insurance company while purchasing the policy. Later, she claimed insurance after an emergency surgery. The insurance company accepted her claim without any issue because all the facts were disclosed truthfully and completely. Situation 2. Reena's house was damaged by a fire. She had two insurance policy with different company, both covering the same risk. Both insurance paid part of claim, but neither paid the full amount of the loss, sharing the liability based on the proportion of their coverage. Which of the following principle of insurance are being illustrated in each situation? Very simple question. You can all answer this question. Easy, simple, six principle of what? Six principle of the insurance. Everyone remember the six principle of the insurance. You can all easily answer this question. Six principle of the insurance. Under the sixth principle, we have two situation. Based on two situation, just see which can be the correct answer. Everyone, give me 2 minutes. Azan is going on. Give me 2 minutes. Okay, let the Azan finish and then I will be giving the answer of this question. Okay. Okay. So am I audible to everyone? Am I audible to everyone? So, first situation is saying that Reena took out a health insurance, disclosed all the necessary detail about her medical history, lifestyle. So, this is known as principle of utmost good faith, right? So, principle of utmost good faith for situation one. And principle of contribution, because see, Reena house has damaged by a fire. two insurance policy with different companies covering same risk, right? But neither paid the full amount, right? Obviously, so principle of contribution for the situation second. So yes, A is the correct answer here, right? Now let's talk about the sixth principle of the insurance, very important for all of you. So we have principle of utmost good faith, insurable interest, indemnity, subrogation, contribution, and proximate cost. These are the six principle of insurance for the insurance contract to be a valid contract. Okay, so if you want to be a valid contract, so there are six additional principle to a insurance policy. First, utmost good faith means you have to disclose all the relevant fact related to your particular insurance. For example, I am taking a health insurance, and if I have any health issue, I have to disclose is clearly in front of the insurance company. Now insurance company also have to disclose all the relevant fact of the insurance in front of me, right? Principle of insurable interest means whatever, if you are taking any insurance, or if you are taking insurance for any asset, that asset should have a monetary benefits on you, right? So there should be some monetary value of that particular asset, that is the insurable interest. Indemnity, indemnity means making good the losses. Okay, it means that whatever, so in the contract of insurance you will see that the insurance company, which is the insurer, is promising insured person that if you suffered any loss from the third party, then your loss will be compensated by me, right? So that is the indemnity principle of indemnity, making good the loss, right? Now principle of subrogation, now here I'm just giving you a very simple example. Now for example, there is a person A whose car is hit by another driver, okay, and the driver name is B. Now because this car is hit by this driver, this person has claimed the car repair compensation from his insurance company, right? Okay, now under the principle of subrogation, it allows the insurance company claim the compensation from another driver's insurance company. Why? Because that accident was happened from another driver's fault, right? So that is called as principle of subrogation. And principle of proximate cause means which is the most important cause for the loss. That cause will be treated as the main cause for claiming the compensation. That is the sixth principle of the insurance. Utmost good faith, insurable interest, indemnity, subrogation, contribution, and proximate cause. Clear, everyone? Any doubt? Everyone clear? Any doubt? Yeah, okay. Next question. A loan companies are NBFCs. As per which type of classification? Very simple thing. A loan company is a company based on which type of classification? Very simple question. Loan company is a company based on which type of classification? Yes, it is an activity based classification. True. Liability based, category A, category B. Category A means NBFC ND, non deposit taking. Category B is NBFC D, deposit taking, right? Okay, then there is a activity based, okay, and then there is a size based. If you have 500 crore plus asset, then your company NBFCs will be defined as systematically important non-deposit taking NBFC, right? So that is a size based classification. Okay, loan company, activity based classification, infrastructure finance company, core investment company, loan company, these are all activity based classification. Okay, done. Okay, next question. Insurable interest, Chandan, whatever. For example, if I am taking the insurance of this particular thing, this particular thing should have some monetary value. Okay, I should have some monetary interest in this particular asset, and that's why I'm taking the insurance of this asset. Okay, There should be some monetary connection, my monetary interest. Okay, there should be a monetary value on this. Okay, done. Okay, next, consider the following statement regarding the revision of national accounts in India. Revision of national accounts in India. Revision of the base year is mainly done due to increased GDP numbers and attract foreign investment. Statement second says that India's national account revision aim to align with the system of national account SNA 2008 developed by international organizations like IMF and UN. Third, once fixed, the methodology of GDP estimation remain unchanged regardless of the changes in the structure of the economy. Choose the incorrect statement here. Everyone, you choose the incorrect statement. Do not get confused. We have to choose the incorrect statement here. Guys, everyone, we have to choose the incorrect statement here. So there are changes that has been done. Okay. So according to that changes, which of the following is the incorrect statement here? Everyone, please answer this question. We have to choose the incorrect statement here. Kindly, everyone who is watching this session, please at least like the video, guys. Whoever is watching this session, please just like the video. Everyone, at least just please like the video. Okay. See, you are all saying C. Only third statement is incorrect. Okay, let's talk about the all three statement. The revision of the base year is mainly done due to increase the GDP numbers and attract foreign investments. That is incorrect. Based year revised in the national income for more accurate and meaningful comparison, not to inflate the numbers. Very simple thing. Why we have the need to inflate the number? No, the base year revision, the current base year, why the current base year is chosen to have a more accurate comparison of the national income rather than an attracting foreign investment. That is incorrect. So first statement is incorrect. Second, India's national account revision aimed to align with the system of SNA 2008 developed by international organizations like IMF and United Nations. True. Now, once fixed, the methodology for GDP estimation remain unchanged regardless of the changes in the structure of the economy. That is false. Okay, methodology is actually revised periodically. Okay, this the revision should be done periodically. So if you are saying that it remain unchanged, that is not. So there are periodical changes that has been done here. Okay, and the periodical changes are very necessary. And why? Because these periodical changes reflect the economical changes. These periodical changes reflect the economical changes, right? And that's why, again, we have to choose the incorrect statement. First is incorrect, third is incorrect, D is the correct answer. Okay, D, Chandan is correct here, Ruchi is correct. Okay, Chandan, Ruchi, both are correct, everyone. Yes. Done, guys. Any doubt in this? If you have any doubt, please feel free to ask your doubt, everyone. Any doubt, you are free to ask your doubt, everyone, guys. No doubt, clear? Okay, so tomorrow's marathon session will also be live on this channel, guys. So you have to subscribe this channel, okay? You have to subscribe this channel. Tomorrow's the class will also be live in this channel, please. So don't wait for the link to be shared. Okay, you will be getting notification from the YouTube itself. So you have to subscribe it, right? PPB marathons will also go on in this channel. Okay, as you have seen that events are already live for all the marathons. Okay, the revision of the base year is mainly done to increase the GDP number. That is false. See, national income base year revisions has been done. Okay, so there has been new base year introduced in the national income. Why the new base year has been reduced? To have a more good comparison. Okay, if you are comparison today national income with, for example, 2003's national income. That will not give you an accurate changes which are done in the economy, right? But when we shifted the base year to the recent year, like 2012, now it will give you more accurate changes, more accurate economical view of the national income. And that's why the base year has been shifted. Base year is shifted not to inflate numbers, not to attract foreign investment, just to have a better view of the economy. Clear? Next question. Now, we have to calculate here. Okay, everyone. Now, this I have just make a mistake in the numerical class. So, given the following data in crore, okay, we have to calculate the GDP here. Everyone, please answer this question. We have to calculate the GDP here. Everyone, please have to answer here. Everyone, you guys. We have to answer. Everyone, please answer this question. We have to answer it. We have to calculate the correct answer here. Everyone, please answer this question now. Let's talk about this question. First of all, we have to calculate the thing. Okay. So we have to calculate the concept is GDP is equals to C plus I plus G plus X minus M. Okay. We have to calculate C plus I plus G plus X minus M. Right? Everyone. Okay. We have to calculate this. Right? Now, let's talk about the consumption. It is 6,200 plus investment is 2,000 plus government expenditure is 2,500 plus X minus M. Okay, now X minus M is 1,300 minus 1,800. Okay, everyone. Now, what about, ma'am, net indirect taxes, and what about, ma'am, changes in inventories? Now, please listen carefully here. Okay, when we are talking about changes in inventories, this is 300 given, which is already included in investment. Means this portion is already included here. Means it is like 1,700 plus 300. 300 is the changes of inventories, which is already included in the investment portion. So we don't have to consider it externally. We don't have to consider it here. Okay, and we have to calculate the GDP at market price. Net indirect taxes cannot be used here. Okay, so just we have to simplify this, and once we solve this, the answer is 10,200. So the correct answer is B. Yes, the correct answer is B, everyone. This changes in inventories, again I'm saying that, see, this changes in inventories. We don't have to add it externally here. Why we don't have to add it externally here? Because this is already adjusted. This is already included here. So the correct answer is 10,200. For example, this is not given. Only changes in inventories given is 300. Okay. Now, if it is not given that we have to include it in the investment, so we have to add 300 here. Okay, then the answer will be 10,500. Right? So the correct answer is B, that is 10,200. Clear, everyone? B is the correct answer, 10,200. Everyone, if you have any doubt here, you are free to ask your doubt. Everyone. Any doubt? Please take four numericals more for just break from the theory. So yes, okay. I haven't take a more. I don't think that I have frame a lot of numerical questions in today's session. Why? Because I've already discussed a numerical session. Okay, completely in one separate video, and that's why I don't find a need to have a numerical question more here. But let's see, we can just add it at the end of the session, no issues. There is no use of net indirect taxes here. There is no use of NIT here also. Okay, guys? Okay. Next question. Net direct taxes, net indirect taxes, there is no use of net indirect taxes here. Okay. Okay. Which of the following factors were responsible for the implementation of economic reforms in India in 1991? PYQ. This is a previous year question, everyone. PYQ. Which of the following factors responsible for the implementation of economic reforms in India in 1991? Adverse balance of payment, poor performance of the public sector, drop in the foreign exchange reserve, or all of the above? Everyone. Which of the following factors responsible for the implementation of economic reform in 1991? Just tell me, what is the economic reform of 1991? Everyone, just tell me, what is the economic reform of 1991? Just tell me, what is the economic reform of 1991? What is the economic reform of 1991? Yes, liberalization, privatization, and globalization. Adverse balance of payment, poor performance of public sector, drop in the foreign exchange reserve rest. D is the correct answer. All of the above. Okay. All of the above is the correct answer. LPGS, liberalization, privatization, and globalization. Clear. Next question now. Let's have a numerical session. Okay. Now, who was saying about the numerical question? Yes, Krishna, please answer this question. This is a numerical question. Now, please answer this question. I'm just switching off the camera, okay? Okay, so the 10-year bond with a face value of 1,000, annual coupon rate of 8%, currently priced at par in the market. Now, consider two interest rate changes. The interest rate increases from 8% to 9%. The interest rate decreases from 8% to 7%. Assuming annual coupon payment and no taxes or transaction cost, what is set is in the changes in the bond price in both the scenario? Everyone, please answer this question. Now you can all answer this question. Everyone, very simple, easy. Answer this question. Everyone, you can all answer this question. Okay. So Sunil is saying B, Smriti is saying B, Ajit is saying D, Kiran is saying D, okay, Hema B, Ruchi B. Where are everyone? Okay, why I'm not seeing each and every one of you in the class? Everyone, at least just please na like and share the video, guys, so that many bankers can attend this session. Lavnish is saying D. Okay, where is Divya? Okay, B D B D. Confused. Now, first of all, see. Now we have to use the bond theorem here. You know that there are four bond theorem, you know that. Okay. Now the first bond theorem says that there is an inverse relationship between the market interest rate and the bond price. It means that if the market interest rate is increasing, bond price is decreasing. If the market interest rate is decreasing, bond price is increasing, right? Okay, so this is the first theory. Second theory, it is saying that second bond theorem, it is saying that whenever, see, understand the concept of second bond. It is saying that whenever there is an increase in the bond price, when there is an increase in the bond price due to the market interest rate decreased, okay, so the increase in the bond price is always greater than the decrease in the bond price. Why there is a decrease in the bond price? Because the market interest rate increased. So if the market interest rate is decreasing and increasing in the same proportion, bond price increase will always greater than bond price decrease. Right? This is the second theorem. Now understand the concept here. In the first situation, the interest rate increases from 8 to 9%, where here the bond price will decrease. In the second, the interest rate decreases from 8 to 7%. It is by the same proportion. 1% here, 1% here. Market interest rate decreases means the bond price increase, but bond price increase is always greater than decrease. So B, the price change in B will greater than A. Now let's analyze the option. The price of the bond will decrease more in scenario A than no. The price in the bond will increase more in scenario B than decrease in scenario A. B is the correct answer. Right, B is the correct answer. Everyone, yes. If you have any doubt in this question, please ask. I will again explain you. If you have any doubt in this question, please ask. I will again explain you. Any doubt? Clear? Kiran, Ajit, Himanshu, Lavnish, Ruchi, Hema, everyone. See, if you have any doubt, please feel free to ask your doubt. Yes, it is a good question. Any doubt? I always take good questions, right? That you all should accept. Questions are always innovative. Yes, confusion. Kavita. Okay, next question. Which of the following statement is not true about social infrastructure? Health is the most crucial component of the social infrastructure. Education, water supply, transportation, agriculture, allied activity, infrastructure, irrigation, management. These are all included in social infrastructure. Just tell me the correct answer. Everyone, just read out and tell me the correct answer. Everyone, just tell me the correct answer. Simple. You can all answer this question. Both are true. C, both 1 and 2. Irfan C, Chandan C, Bala C, Himanshu A, Time for Fun C, Krish, Lavnish D, Hema D, Sharmila C. This is so easy, but again you are confused. Think, why I'm taking this question? This is very easy question, but again you are missing the important part. Not true. I am saying which of the following is not true about social infrastructure. Health is the most crucial component of social infrastructure. True. Education, water supply, transportation, agriculture, allied, they are all the part of social sector. True. Both are true. So which of the following is not true? Neither A nor 2. D is the correct answer. Okay. Yes, D is the correct answer. Neither one nor second. D is the correct answer, everyone. Yes. Yes. Next question now. A very good question, huh? Please just focus on this question and then answer. The eighth plan faced significant delays due to several factors, including political changes, global economic shifts, and balanced budget imbalances. The eighth plan, initially proposed for a period of this year, eventually shifted from 1992 to 7 because in these 2 years, you know that we have our annual separate plans like the holidays. Which of the following factor does not directly contribute to the delay of the implementation of aid plan? You have to focus on this question. What I'm saying that which of the following factor does not directly contribute the delay in the implementation of aid plan? Because the early eighth plan was designed from 1990 to 1995, but due to circumstances there was 2 year gap we have to take 1990 to 1992, and then eighth 5 year plan actually took place from 1992 to 1997. What is the factor that does not directly contribute to the delay in the implementation of eighth plan? The changes in the government in June 1991, massive global economical changes, the imbalances, and the decision to maintain the eighth plan from this rather than shifting it to this. Everyone, please answer this question. Correct answer is what? So this is, see, when we are talking about this particular thing, the changes in the government in June 1991, this actually contribute to the delay of the implementation of eighth five-year plan. Yes, because there was a government changes that happened in 1991, and due to which the delay happens for the implementation of eighth plan. Massive global economical changes, you know that 1990, 1991 LPG reform introduced, we have lot of changes going on in the economy. Yes, that contribute to the political instability, that contribute to the delay in the implementation of eighth plan. Fiscal imbalances was there. Yes, it was also the factor for the delay in the implementation of eighth plan. So these are the factors which are contributing. We have to tell which of the factor does not directly contribute. The decision to maintain the eighth plan from 1990 to 1994 rather than shifting it to, this was actually the response. This was not a, you can say this is not a reason. Okay, the decision to adjust the plan period from 1990 to 1995 to 1992 to 1997, it is actually a response because of the political and economical imbalances. Okay, it is not a cause of delay, it is a response in itself. Okay, the causes of the delay was the global economical political instability. These were the concepts, these were actually lead to the delay in the implementation of the plan. And so D is the correct answer here. D is the correct answer here. Now you can just have this two annual plan. Very simple thing. There was fast changing political environment at the center. So political changes were done. This was one of the factor. Okay. Second, we have massive economical changes. Okay. Second, then we have budget imbalances. These were all the factors for the delay in launching the eighth plan. Just read out this. These were the delay which was for the implementation of the eighth plan. Okay, and that's why the eighth plan was shifted from to this time frame 1992 to 1997, because we have two annual plans introduced separately in 1991 and in 1991 to 1990. Clear? So any doubt in this question? If you have any doubt, please ask everyone. Everyone, if you have any doubt, please ask. Everyone, any doubt? Okay, good. Next question. When the demand of a commodity decreases due to the change in the climate, then the demand curve will shift or move. Now, I'm not going to answer this. Please just answer carefully this question. I have explained this to you 100 times. I have explained it 100 times, everyone. I have explained it 100 times, everyone. I've explained it 100 times. Please answer. Yes, everyone. See, all the bankers who are watching this session. See, I want answer from all the bankers who are watching this session. When the demand for commodity decreases due to the changes in the climate, means the other factors are variable. Other factors are variable. Other factors, we know that the shifting will take place. Okay, so there will be no upward and downward. Okay, and the demand is decreases. Decreases means leftward, increases means rightward, right? So every one of you is correct. Now I am happy that you have all given me the correct answer. Thank you, everyone. Very good. Next question. We have to choose the incorrect statement here, everyone. Just choose the incorrect statement here. SIDBI, the Small Industries Development Bank of India, was set up in 1994 under the Parliament Act, SIDBI Act 1993. It provides direct and indirect finance to MSME, help in expanding marketing channel for the product of MSME sector in the domestic market only. We have to choose the incorrect statement here. Everyone, please answer this question. Simple, easy. You can all answer this question. Simple, easy question. Thank you, Ruchi. Thank you. Everyone, we have to choose the incorrect statement here. We have to choose the incorrect statement here, everyone. We have to choose the incorrect statement here, guys. Please. SIDBI, the basic. This is actually a basic question. SIDBI has been established in 1990. Act has been passed in 1989. Wrong. Headquarter is in Lucknow. Promotion of MSME. In the domestic market only, no. Domestic as well as international market. Both are included in SIDBI, right? So both the statements are wrong. Incorrect. C is the correct answer. None of you is correct here. Are correct here. Sorry. None of you are correct here. Okay. Both the statements are wrong. Done. Okay, guys. Done. Yes or no? Good. Next question. Market demand curve obeys law of downward sloping demand, law of upward sloping demand, law of diminishing, or none of these. Everyone. Market demand curve obeys what? Law of downward sloping curve, law of upward sloping curve, law of diminishing, or none of the above. Please answer this question. Yes, it was a tricky. No, it is not a tricky question. It is a very easy question. Market demand curves obeys downward sloping curve. Acha, upward is the supply curve. Upward is the supply curve. You know that the difference between law of demand and law of supply? The difference between law of demand and law of supply? Law of demand from the buyer's perspective. Law of supply from the seller's perspective. Law of demand, price change over the quantity demand. Law of supply, price change over the quantity supplied. Law of demand says that price has an inverse relationship between quantity demand. Okay. Law of supply says that we have the positive relationship. As the prices rise, the supplier will tend to supply more to maximize their profit. They both have ceteris paribus, means other factors remain constant. Now, law of demand curve, it is downward sloping from left to right. Law of supply curve is upward sloping from left to right. Now, the equilibrium position of law of demand and law of supply is called as the price equilibrium. Okay, it is known as what? Price equilibrium. And always remember, price equilibrium is also known as what? Market clearing price. Okay. So I have given you a short explanation of theory. Any doubt here? Any doubt here? Okay. Next, which of the following statement is incorrect regarding the amendments made to Chapter 3rd B of RBI Act 1997 concerning the non-banking financial companies, right? Everyone. Please answer this question, okay? First, NBFCs were required to obtain a certificate of registration from RBI and maintain minimum net owned fund. All NBFCs are mandated to are mandated to create a reserve fund and transfer at least 20% of their annual profit to it. RBI was empowered to prescribe policies only for the public sector NBFCs regarding income recognition and accounting standard. RBI was authorized to order special audits and file winding up petitions against NBFCs. Now we have to answer this question, everyone. Just please answer this question, everyone. Incorrect. First thing, not correct, incorrect. Amendments to Chapter 3rd B of RBI Act 1997. Incorrect statement. Everyone, we have to choose incorrect statement. See. Okay, first, NBFCs are required to obtain certificate of registration from RBI and maintain net own fund. True. All NBFCs mandated to create a reserve fund and transfer at least 20% of the net annual profit to it. True. Okay. Remember this percentage also, please. Okay. These two are correct. Remember the percentage also. Okay. RBI was empowered to prescribe policies only for the public sector NBFCs regarding income recognition and accounting standard first. These are applicable to all NBFCs, whether they are public or private. Okay. For all NBFCs, RBI is authorized to have prescribed policies. So, yes, both. So, C is incorrect, right? RBI was authorized to order special audit and file binding a petition against NBFCs. True. So, these are all correct. This is wrong. It is for all NBFCs, whether public or private. Okay. So, the correct answer is C. Done. Okay. Good. Next question. Shift in the supply means, everyone, shift in the supply means. Shift in the supply means, everyone. When the changes in factor other than goods own price affect the quantity supplied. When changes in goods own price affect the quantity supplied. Both A and B or none of the above. Shift in the supply means what? Everyone, please answer this question. Shift in the supply means what? Please answer this question, guys. Shift in the supply means what? Please answer this question. Shifts. Shifts. Shift means leftward. Shift means rightward. Shifts happen when the changes in other factors other than goods own price affect the quantity supplied. True. When changes in goods own price affect the quantity supplied, it is all only called as movements. It is only called as movement. Movements means upward and down. Movement means upward and down. Okay. Next. Now see. Reserve Bank of India observed that the money supply in the economy is growing rapidly, leading to the inflationary pressure. Okay. At the same time, several banks are aggressively dispersing retail and personal loan. Okay. To address this, RBI decided to take a direct measure without altering interest rate. Which of the following action is RBI's most likely to take in this scenario? Everyone, please answer this question. Okay. So you have to answer this question, everyone. Please answer this question, guys. Please answer this question. So just please take a look in this question and then answer. Kiran is saying A, reduce the repo rate. I am saying to address this, Reserve Bank of India decide to take a direct measure without altering the interest rate. Direct measure without altering the interest rate. We have to choose the correct answer. First of all, RBI is seeing that money supplies increase. So the aim is to reduce the money supply. The aim is what? To reduce the money supply. Why we have to reduce the money supply? to decrease the inflation of the economy, right? Now, what can be the option? First, reducing the repo rate. If the repo rate has been reduced, means RBI is giving cheaper loan to the commercial bank. When RBI is giving cheaper loan to the commercial bank will borrow more from RBI. When commercial bank borrow more from Reserve Bank of India, obviously the commercial bank has more money to lend. When they have more money to lend, they will give more money in the market, leading to the high money supply. So here the money supply will be increased, not an option. Cash reserve ratio. Now, cash reserve ratio means every bank has to reserve a percentage of its total deposit to RBI in form of cash only. That is known as cash reserve ratio. Now, if the CRR is increased, means bank are giving more cash to RBI. Bank are giving more cash to RBI, they have less money. Less money, they will lend less in the market. Market's money supply will reduce, inflation will be reduced. Okay, decreasing money supply decreasing the CRR, increase the money supply. Increasing the CRR, reduce the money supply. So the main aim is to reduce the money supply. So B is the correct answer here. Now, if you increase the bank rate, the money supply, so here the bank rate will also have a negative relationship over the money supply. Increasing bank rate will reduce the money supply, but again remember this here, that we don't have to alter the interest rate here. So CRR is the best option, increasing the CRR. Okay, done. Clear? Any doubt here? Everyone, if you have any doubt, please ask. Clear? Okay, so can we have a 5 minute breaks now? Everyone, can we have a 5 minute break now? Okay, everyone, can we have a 5 minute break now? Okay, first just please have a 5 minute break now, and then we will start the next question. Everyone, okay? Okay, guys. Okay, done. Am I audible to everyone? Am I audible to everyone? Audible? Okay. So let's talk about the next question. Okay. Next question is, just please see this question carefully. Okay. So country A have shown a 7% increase in the GDP. Okay. Driven mainly by industrial expansion and export. However, its human development index remain unchanged with persistent issue in healthcare and education access. Country B have recorded 3% GDP growth rate this year, but significant investment in the public healthcare, education, poverty reduction have led to a notable rise in the life expectancy, literacy rate, and overall well-being. So, which of the following best distinguish between economic growth and economic development? Now, you have to answer what is the difference between economic growth and economic development. Best reflect the difference between economic growth and development. Everyone, please answer this question. Everyone, please answer this question. So now you are all saying, yes, now you are all saying D is the correct answer. Okay. And everyone else, please answer this question. It is regarding growth and development. You can all answer this question, everyone. See, okay, just a second. Give me 1 minute. I'm just having the difference, okay? Okay, now let's talk about this. Country A has shown a 7% increase in the GDP over last year, mainly by industrial expansion and export. However, HDI remain unchanged. Human Development Index remain unchanged. It means that what? First of all, before this, let's talk about the difference between economic growth and economic development. What is the difference between economic growth and development? See, when we are talking about economic growth, everyone, just a second, let me switch on the camera. Okay. Now, economic growth means when it is only quantitative. Quantitative means when you are seeing the amount of goods and services increased in the economy, right? It means increase in your national income. It means increase in your GDP. It actually measure over the quantity of the economy. Okay, then it is economic growth. Whereas when we are talking about the development concept, see, development means improvement in the living standard of the people, the lifestyle of the people. We are improving in the Human Development Index, quality of life, healthcare, literacy, life expectancy. So these are the economic development, right? So growth is quantity-wise measure, whereas development is qualitative measure. Okay, increase in the quality, it is development. Increase in the quantity, it is growth, right? So development, it is multi-dimensional. This is also very important because you are seeing various aspects. So development is multi-dimensional, whereas growth is single dimensional. When we are talking about the growth comes before the development. Why? Because we need to have money to get a better living standard. So growth comes before the development, whereas development comes after the growth. Okay. Next difference is indicator of economic growth is GDP, GNI per capita income, whereas economic development, HDI, human poverty index, gender development index, okay, it only refers to the increase in production, it refers to the increase in productivity. So when we are talking about this question, in the first statement it says that HDI is not improved, so development is not the concept, it is the growth concept. We have increased, seen the industrial expansion, increase in the GDP, so it is growth. Now when we are talking about situation second, country B has recorded only a 3% GDP growth rate this year, okay, whereas other things are increased a lot, like literacy, expectancy. So this is obviously a development, okay. So the correct answer is country A experiencing no. Country A reflects economic growth without development. B demonstrate development with moderate growth. C is the correct answer. Everyone, yes, C is the correct answer. Any doubt here? C is the correct answer, right? Any doubt? Good. Next question. Now let's talk about the next question. FDI in India is prohibited in which of the following sector? Very simple, but this was the question asked in the previous exam cycle. This was the question asked in the previous exam cycle. FDI, which sector is prohibited? FDI, which sector is prohibited? Defense, health, irrigation, or are allowed? These are allowed. In which sector it is prohibited? Lottery business. So D is the correct answer. In which sector it is prohibited? Lottery business. D is the correct answer. Now, what is the current foreign direct investment limit in the telecom sector under the automatic route in India? 49, 74, 100 or 51%? Answer this question, everyone. Everyone, please answer this question. What is the current foreign direct investment limit in the telecom sector under the automatic route in India? Telecom. Yes, 100%. See, in the telecom sector, there is Tarang Sanchar Network or Tarang Sanchar initiative that has been started. Okay, so these two are important. 100% FDIs is allowed in telecom sector. Tarang Sanchar is also related with the telecom sector, right? Now, if we talk about the insurance sector, how much FDIs is allowed in the insurance sector, everyone? How much FDIs are allowed in the insurance sector? Please answer this question. How much foreign direct investments are allowed in the insurance sector? How much FDI? So, yes, see, 74% as per the book and as per 2025 budget. As per 2025 budget, 100% FDIs are allowed. As per 2025 budget, 100% foreign direct investments are allowed. Clear, everyone? Okay. Next question. See, a retirement fund scheme is an open-ended with a compulsory lock-in of 5 years till the retirement age, whichever is earlier. A children fund is an open-ended scheme with a lock-in period of at least 3 years until the children turn 21, which is earlier. Both are the example of solution-oriented scheme meant for the life goal, specific life goals. Both the statements are correct. B and C are correct. A is correct. All the A, B, C statement are correct. Everyone, please answer this question. Everyone, answer this question. We have to choose and answer this question. The correct option. The correct option. Everyone. Okay. A and C. Confused. Only A is correct. Okay. A and C are correct. So you are all confused with the A and C. You are all confused with A and C, everyone. You are all confused with A and C. Yes. Okay. Okay. See, retirement fund scheme is a open-ended scheme with a compulsory lock-in of 5 years or till the retirement age, whichever is earlier. That is true. That is true. Okay. Children fund is an open-ended scheme with a lock-in period of 3 year, 4. It has a lock-in period of 5 year or till the child turns 18, means majority, whichever is earlier. So second is wrong. Third, both are the example of solution oriented scheme. Correct. So first and third means A and C are correct. A is the correct answer. Right. Done. So this is the retirement and children fund. Okay. So when we are talking about the retirement fund, it is an open-ended retirement solution oriented scheme with a lock-in period of 5 years till the retirement age, whichever is earlier. Children fund, this is an open-ended fund for investment for children having a lock-in period of at least 5 years till the child attains maturity, whichever is earlier, right? So this is retirement fund, this is children fund. Okay, both are important. Remember this, everyone. Okay, done. Now next question. What is the minimum capital requirement for a merchant banker? Everyone, minimum capital required for a merchant banker. Minimum capital required for a merchant banker. Everyone, minimum capital requirement for a merchant banker. No, it is not a close ended. No, Thambi, it is not a close ended thing. See, it is a screenshot which is written here. Both are open ended. Okay. What is the minimum capital requirement for a merchant banker? Minimum capital requirement for a merchant banker. Yes, 5 crore. If we talk about the minimum capital requirement for a merchant banker, it is 5 crore. Right? Yes. So merchant banking, just tell me what is a merchant banking? Just tell me what is a merchant banking? Did you all remember? Do you all remember what is merchant banking? Yes, 5 crore is the correct answer. Okay, next. Choose the correct statement regarding the call and put option. Everyone, call and put option. A call option gives the holder the obligation to sell a stock at a specific price. A put option gives the holder the obligation to buy stock at a specific price. Call option give the holder the right to buy a stock at a specific price. Put option give the holder the right to sell a stock at a specific price. Everyone. Yes, merchant bankings or merchant banking is a specialized banking branch which are specialized for giving banking services to high net worth individual or large corporates that are called as merchant banking. Okay. Now, you have to choose the correct statement regarding the call and put option. First of all, the call and put option is always a right, not the obligation. So, obviously, third and fourth is the correct answer. Now, let me explain what is a call option. Let me explain what is a put option. If you are a buyer of call option, the buyer of the call option has the right to buy a stock at a specific price on or before the maturity date. And if you execute your right that okay, I want to buy this particular asset, then the counterparty has to sell it. It is obligation for them to sell it to you. Okay. And in a put option, when you are buying the put option, it means you have the right to sell a stock at a specific price, right? Now, if you have executed your right that yes, I want to sell it to you, then the counterparty has this obligation that they have to buy it from you, right? So this is call and put option. Third and fourth is the correct statement. Okay, done. Next question. We have to choose the correct statement here. Non-recourse factoring. In this type of factoring, the factor does not take the risk of default. If the debtor fails to repay the invoice, the liability falls on the business firm itself. Recourse factoring, the liability of the bad debt remain with the factor and they cannot reclaim the money from the business in case the debtor default. We have to choose the correct statement here. Everyone, we have to choose the correct statement here. Guys, Just choose the correct statement here. Very simple, correct statement here. Non-recourse and recourse factoring. First of all, recourse and see, just remember these two words, recourse and non-recourse. Remember these two words, recourse and non-recourse. Recourse means if the buyer defaults on payment to the factor. In case of recourse, when default happens, means buyer defaults on payment to the factor, then factor has this right that they can claim the compensation from the seller. Here you can just claim the compensation or reimburse the compensation from the seller, right? Whereas when we are talking about non-recourse factoring, it means that if buyer defaults on payment to the factor, here you cannot have a compensation, you cannot reimburse the loss from the seller. The factor has to absorb all the loss by themselves. That is known as non-recourse. So non-recourse means the factor does not take the risk of the default. If the debtor fails to pay, the liability falls on the business firm itself. No, it is known as the recourse factoring. It is known as recourse. Non-recourse factoring means the liability of the bad debt remain with the factor and they cannot reclaim the money. So it is actually a non-recourse factoring, right? So the correct answer is neither one nor. Right. Both are incorrect. So you must have understand this concept now. What is recourse factoring and what is non-recourse factoring? Yes. If you have any doubt, please ask. Recourse and non-recourse factoring. If you have any doubt, you are free to ask your doubt, everyone. Any doubt? No? Okay, next question. We have to choose the correct statement regarding the Monetary Policy Committee in terms of inflation target. Monetary Policy Committee in terms of inflation target. Everyone, please at least like the video. Whoever is watching this video, kindly just please like the video. Everyone who is watching this video, please at least like the video, guys. Okay. Monetary Policy Committee is considered to have failed if inflation exceeds the upper limit in any single month. If average inflation remains below the lower tolerance limit for 3 consecutive quarters, it is considered as a failure of MPC. And third, MPC has to revise the inflation target immediately upon the failure. Which of the following statement is correct here? Now just choose the correct statement here. Monetary Policy Committee, we have to choose the correct statement here. We have to choose the correct statement here. Karthik is saying B, Krish is saying D, and everyone else. Read out the question carefully and you can answer this question. Please read out the question carefully and then you can all answer this question. Very easy. It is regarding the Monetary Policy Committee in maintaining the inflation target. Second and third. D. D. Okay, so Monetary Policy Committee considered to be failed, okay, if it exceed the upper limit in single month. Now just see this failure of Monetary Policy Committee. I have written it here, okay. Under the following circumstances, it will be considered as a failure of RBI to achieve the inflation target. When did a Monetary Policy Committee considered to be as failed? If the average inflation is more than the upper tolerance level of the inflation target for the 3 consecutive quarters. Okay, so there is an upper tolerance level, means how much inflation is tolerated in the economy according to our per capita income. So there is the topmost tolerance level. Now the average inflation is over and above that level for 3 consecutive quarters, then it will be considered as a failure of MPC. Or second, when the average inflation is less than the lower tolerance level, there is an upper and lower tolerance level. If average inflation is higher than this or lower than this for the 3 consecutive quarter, then it will be considered as a failure of MPC committee for managing the inflation. Inflation, too much inflation is also wrong, too less inflation is also wrong. Okay, so when we are talking about this, MPC is considered to have has failed if the upper in any single month. No, there is no single month concept. Average inflation remains below the tolerance level for the 3 consecutive quarter. That is correct. MPC has to revise the inflation target immediately upon the failure. False. So only second statement is correct here. B is the correct answer. Okay, we have to maintain both the level. Neither it will be above this nor it will be below this. In the 3 quarter, the judgment is based on the 3 quarter, and if it is above or below this for the 3 consecutive quarter, then it will be considered as a monetary policy failure. Clear? Any doubt in this? Any doubt in this? Yes or no, guys? Any doubt in this? Next question. Reena has invested 6 lakh in a mutual fund. Okay. After 2 years, the market value of her investment grew to 7 lakh 50,000. What is the absolute return on her investment? Easy. What is the absolute investment return? If not immediately, then what? After 3 consecutive quarters. Everyone, chalo, answer this question. Just calculate and answer. Very easy. Calculate and answer. Calculate and answer. What is the absolute return on her investment? Absolute return on her investment. Reena invested 6 lakh in a mutual fund. After 2 years, the market value of her investment grew to 7 lakh 50,000. What is the absolute return on her investment? Very simple. Absolute return. How you can calculate absolute return? Current minus original upon original into 100%, sorry, percent into 100. That is the absolute return. That is the absolute return. Means we just have to calculate what is the percentage of the return in this mutual fund. So current price minus the previous or the original upon the original into 100, that is 25% is the correct answer. Obviously. Done? Clear? Next question. An economy has the following data for the year. This is the following data for the year. Hello, good evening, Gopal. An economy has the following data for the year. GDP at market price, depreciation, NFIA, net indirect tax, sorry, direct indirect taxes, subsidies. You have to calculate the national income. Everyone, please answer this question. Now, I'm not going to tell you this. You have to answer this. Everyone. You have to answer this, everyone. Please, everyone, you can answer this question easily. Answer this question. Hmm. Sharmila Singh is the correct answer. And everyone else? Sharmila Singh is the correct answer. And everyone else? Okay. See, see, see. Okay. First of all, we have to calculate national income here. We have to calculate the national income here. Where is Hema? Yes, Hema has also said C. Gopal. We have to calculate national income here. First of all, national income is also called as net national product at factor cost. You know that. NNP at FC. Now, what is given here? GDPMP. What is given here? GDPMP. We have to convert this into net national product at factor cost. The first task is this. The first task is GDPMP should be converted into NNPFC. The formula is what? The formula is, first of all, we have to see, we have to change everything here. Gross is different from net. Domestic product is different from national product. Market price is different from factor cost. All the three things are different. Now, let's talk about this. Gross to net. Gross to net minus depreciation. Domestic to national product. I have given you a very simple trick. If you all remember, I have given you a very simple trick. Domestic to national. From smaller to bigger. Remember this. Your house is smaller than your nation. So I have told you this trick in the class. Domestic to national plus net foreign income. Market price to factor cost. Market price to factor cost minus net indirect taxes. Okay. What is net indirect taxes? Indirect taxes minus subsidies. Right? Everyone? Now, let's talk about this. So, GDP MP given as 2,500 minus depreciation is given 200 plus NFI is given 100. Okay, minus net indirect taxes. Net indirect taxes is indirect taxes minus subsidies. It is 150 minus 50 means 100. So, it is 100 plus 100 minus 100. 2,500 minus 200 is 2,300. The answer is 2,300 billion. C is the correct answer. Any doubt here? Guys, any doubt? Yes or no? If you have any doubt, please ask. And please, whoever is watching this session, at least just like the video, guys. Clear? Good. Next question. Queenery sector is a part of. Queenery sector is a part of agriculture, service, industrial or foreign sector. Queenery sector is a part of agriculture, service, industrial or foreign sector. Everyone, please answer this question. Queenery sector is a part of agriculture, service, industrial or foreign sector. Everyone. It is a part of service sector. Queenery and quaternary, they both are the part of the service sector, right? Next, which of the following is the correct formula? Everyone. Which of the following is the correct formula? Everyone, please answer this question. Abhi, I have just explained to you now. Which of the following is the correct formula here? Which of the following is the correct formula here? Everyone, correct formula. Market price and factor cost. Which of the following is the correct formula here? See, depreciation cannot be the answer because it is gross minus depreciation is equals to what? Net, right? So this both can be the answer now. Factor cost plus indirect taxes minus subsidies is equals to market price. Correct. A is the correct answer, right? A is the correct answer. Yes, A is the correct answer, everyone. Good. Next question. Consider the following statement about the foreign exchange retail platform. We have to choose the correct statement. The platform imposes transaction charges on all trade regardless of the transaction value. Only banks are eligible to participate in this platform. We have to choose the correct statement here. We have to choose the correct statement here. Everyone, we can choose the correct statement here. The correct answer is choose the correct statement regarding the foreign exchange retail platform. We have to choose the correct statement here. The platform imposes transaction charges on all trade regardless of the transaction value. Ruchi, correct. The platform imposes transaction charges on all trade regardless of the transaction value. False. The platform always imposes the charge if the transaction value is over and above $50,000. It is the limit. If it exceed $50,000 transaction, then only the charges is levied. Okay, and that's why first is wrong. Only banks are eligible to participate in this platform. No, the platform allow participation of the retail customer, small institutional investors, banks. Okay, all are allowed, not just bank. No. So we have to choose the correct statement. Neither one nor two is the correct answer. Okay, neither one nor two is the correct answer. Good. Next question. Which of the following statement regarding Reserve Bank of India is correct? Choose the correct statement regarding Reserve Bank of India. RBI commenced business on 1st April 1949 with a paid-up capital of 10 crore. RBI was established as a private bank with a paid-up capital of 5 crore and commenced operation from 1st April 1935. RBI nationalized in 1950 with a paid-up capital of 1 crore. RBI was established in 1934 and commenced operation in 1936 with a paid-up capital of 5 crore. Everyone. Very easy. This is actually a PYQ. This is actually a PYQ. This is actually a PYQ. RBI was established as a private bank with a paid up capital of 5 crore. Commenced operation on 1st April 1935. Correct. 5 crore. Correct. Private bank. Correct. Okay, so B is the correct answer. Acha, tell me, when did RBI was nationalized? Just tell me. And who given the recommendation to establish RBI? On which committee's recommendation? So these two, just please tell me. Nationalization of RBI has been done in which year? And then who recommended the establishment of Reserve Bank of India? Yes. Nationalization, 1st January 1949. Recommendation, Hilton Young Commission. Recommendation, Hilton Young Commission. Okay, true. So, just tell me, earlier Reserve Bank of India's headquarter was in which place? Earlier Reserve Bank of India's headquarter was in which place? Earlier Reserve Bank of India's headquarter was in which place? Kolkata. And it has been shifted to Mumbai after, right? 1937, I guess, right? Yes, done. Actually, tell me, who was first governor of Reserve Bank of India? The first governor of Reserve Bank of India, the very first governor of Reserve Bank of India. Tell me, the very first governor of Reserve Bank of India. The very first governor of Reserve Bank of India. Everyone. No. No, C.D. Deshmukh. He was the first Indian governor of Reserve Bank of India. He was the first Indian governor of Reserve Bank of India. The very first governor I have asked, he was Sir Osborne Smith. Sir Osborne Smith was the very first governor of Reserve Bank of India. C.D. Deshmukh was the first Indian governor of Reserve Bank of India. Okay, done, done. Next question now. A bank research team is analyzing the impact of interest rate changes on the investment decision during an economic slowdown. The team assumed that reducing the interest rate will significantly boost investment and savings. However, one economist in the team point out that this may not hold true based on the Keynes theory, which suggests investment is more influenced by other factors. Based on Keynes' criticism to the classical theory of interest, which of the following best explain the economist view? Keynes believed that lower interest rate directly increased the investment. Keynes argued that investment decisions are primarily influenced by marginal efficiency of capital and future expectation. Keynes savings are highly interest elastic and the interest are purely rewarded as a reward for saving and reducing them will always lead to the higher investment. Tell me the answer. Everyone. Correct answer is what? Everyone. What? See, this is a very important question. Okay. So this actually have two things. First of all, the classical theory of interest and then the Keynes approach to the interest. Okay. Classical theory of interest always remember that Keynes always argues that investments and saving are interest elastic. According to Keynes point of view, interest and sorry saving and investments, they are rarely interest elastic. It means that the saving and investments, they are not very much dependent upon the interest. They are dependent and influenced by more other factors rather than just dependent on the interest, right? So according to this point of view, investment decisions, these are influenced by marginal efficiency of capital and future expectation rather than interest rates. So this is actually the Keynes criticism to the classical theory of interest. What is the classical theory of interest? It says that interest is purely determined by the interaction or equilibrium of demand and supply of what? Savings. Okay. So this is theories of interest chapter. Everyone. Done? Done, everyone? Next question. Under which section of the respective act are the CRR and statutory liquidity ratio governed? PYQ. This is the PYQ. Everyone, please answer this question. This is a PYQ. Everyone, please answer this question. This is a PYQ. This is a PYQ. Under which section of the respective act are the cash reserve ratio and statutory liquidity ratios governed? CRR, Cash Reserve Ratio, Section 42 of RBI Act 1934. Statutory Liquidity Ratio, Section 24, Section 24 of the Banking Regulation Act 1949. So A is the correct answer. Yes, A is the correct answer. This is a previous year question. Yes. A is the correct answer. Very important. See, all the sections are very important. Okay. Okay. Next question. Which of the following statements regarding government initiatives to boost communication infrastructure in India are correct? FDI, foreign direct investment cap in the telecom sector has been increased to 100% from 74%. Production linked incentive scheme for large scale electronic manufacturing was approved by government in 2020. The Department of Telecommunication launched Tarang Sanchar, a web portal producing information on broadband connectivity speed across India. PYQ. Now tell me the correct answer. It is a PYQ. Everyone, it is a PYQ. Tell me the correct answer here. Everyone, we have to choose the correct answer here. Everyone. Kiran is saying B is the correct answer. Only first and third are the correct statement. Lakshmi is saying 1 and second. Chandan is saying B. Everyone. Okay, so Ruchi is saying A. Only one person is correct here. That is Ruchi. Only one person is correct here. That is Ruchi. FDI in the telecom sector has been increased to 100% from 74%. That is true. Production linked incentive scheme for large scale electronic manufacturing was approved by government in 2022. The Department of Telecommunication launched Taran Sanchar, a web portal providing information on broadband connectivity. For broadband connectivity is their national optical fiber, okay, system, okay, NOFS, that has been launched. Taran Sanchar is actually to give information on the uh, mobile towers and the emissions compliance. Okay, not the broadband speed. It is national optical fiber system that is actually introduced for broadband connectivity. Tarang Sanchar is for actually the mobile networks, giving information about the mobile towers, right? So this is wrong. So first and second are the correct statement. A is the correct answer here. Okay, done. Chalo. The last question of the class. Okay, the last question of the class. So we have to finish the class by 9 p.m. Okay, so this is the last question. Calculate the insurance density based on the following data. Everyone, calculate the insurance density based on the following data. Everyone, please answer this question. Everyone, everyone, please answer this question now. Calculate the insurance density. Insurance density. First of all, what is insurance density? It is premium to population. Okay. So premium is 2 trillion to population is 100 million. So we know that the answer can be only this. A is the correct answer. 2 trillion means 2, then 12 zeros. Okay. 100 million means 1 and 8 zeros, right? So 8 is cancelled by 12. Okay, means 8 is cancelled by 12, 4 is left out. Okay, so we have this answer 20,000. Okay, done? Yes. Okay. So see, this is it for today. Now, this is it for today. I have given you a lot of questions today, and I hope that you have enjoyed this session thoroughly, right? We have again part second, final marathon part second tomorrow at 6 p.m. live, right? So we have part second tomorrow at 6 p.m. live again, right? So again, that class will be from 6 p.m. to 9 p.m. 3 hour session. I have already given you a lot of questions today. Did you all enjoy the session today, everyone? And thank you so much who have joined the session from the very first till the end. Hema, Ruchi, Lakshmi, Vijay, Irfan, everyone. Thank you so much. Yes, Gopal, you have missed half of the session. Okay, just take the PDF and read out the questions. Okay. Thank you so much. Having Ruchi, very good score. Only 5 question if incorrect. Very good score. Okay. Thank you so much, everyone. Please at least just like and share the video to the maximum you can. Everyone, just please like and share the video to the maximum you can. And if you haven't subscribed this channel yet, please subscribe this channel and press the bell notification icon. Everyone, please just subscribe this channel and press the bell notification icon. Thank you so much. Having a very nice day. Take care. Bye bye, guys. Bye, everyone. Take care.